How's it going, traders? Welcome back to my YouTube channel. My name is Bestman Dipri Kelsey Makri. If you're joining us for the first time, you're welcome to Traders Advocate. Actually, this is my first video I'm dropping on YouTube, so all of you are welcome to Traders Advocate. I want this channel to be the last bus stop to all blown accounts. I want this channel to be the last bus stop for all failed traders. So, are you a failed traders or a struggling trader? This channel and gospel will be the right channel for you because this channel is built for traders. As the name goes, traders advocate, right? We are advocating for traders win. We are advocating to see more traders pass their profit challenge. We are advocating to see more successful traders. So there will be no gimmicks, no proprietary information. I'm revealing everything to traders. No replay mood. I won't come here and show you replay mood and tell you, oh, how I flipped $10 to $1 million overnight. And I'll show you replay mood. You've been watching most YouTubers a lot and they do these kind of things. At the end of the day, you've made next or not, you've made no profit. You end up blowing your account. So we have a rule in this community. Those rules is what saved me when I became a trader earlier on, sometime around 2017. My later on the squad, these things are the things that are doing that were not really profitable to me. So what are those rules? No indicators, no moving average, no AI, no robot, no signal provider, no copy trading, no replay mood, no hypothetical stuff. I come out here and I do a top-down analysis, right? I analyze the market before the market play out. This way, you guys get to see my thought process, my emotion, my feeling before I click that button, right? Before I click that buy button or that sell button, what was going through my mind? What was my geology behind that trade? And over time, once you see all of this stuff, it will help build your own confidence and you too can also become profitable forex trader. All right, so I don't want to talk too much. Hit the subscribe button, the bell notification. Watch till the end of the video. If you have a comment, drop the comment at the comment box. Trust me, I go through the comment box. I will reply every comment. You never can tell, your comment can actually be the inspiration into my next video. All right, let's start the analysis. Not wasting much of time. Let's start the analysis. I believe you guys got shit to do. All right, so let's start with the dollar index. For those of you who know me personally, I love trading currency pairs, and before I start my analysis, I love using the dollar index as an indicator while I'm looking at other currency pair. Why am I doing this? Because the dollar index is the average price of the major currency pairs put together. Dollar index is also mirrors the health of the US economy. If the US economy is bad, you know, just looking at the dollar index. Dollar index is dollar index is Euro USD turn upside down. So if you turn the euro chart to upside down, you basically get the dollar index, and the dollar index is the global currency, right? So there's a lot of liquidity coming in and out of the pair. So best believe if the dollar is trading, every other major currency pair is going to trend. If the dollar index is bullish, every other pair is going to be bearish. If the dollar is bearish, every other major currency pair is going to be bullish. So this gives me a clear indication when I'm looking at other currency pair. It gives me a clear perspective when I'm looking at other currency pair. All right, so let's start the analysis. All right, so dollar index will have this massive pull, massive direction to the upside. This move like this linear move gave birth to this consolidation. Let me zoom in properly. So this move like this gave birth to this consolidation. Whenever the market move this linear or straight, the market tends to move sideways after a bit. So this consolidation is as a result of this move like this. Looking at this consolidation, these are several blown accounts. Most people's savings, most people's accounts were blown. Why? Because traders are used to trading directional basis. And as the market is going up, they're buying, the market is coming down, they're selling. Once the market begins moving sideways, a lot of traders get confused because in a range, the range kind of defeat the average knowledge of a trader. Like I said, traders are used to trade directional based. The market is going up, they're coming, the market is coming down, they're selling. Once the market moves in a range, the trading probability is 50-50. So you can make money, you can lose money. Or even those who made money here, there is no consistency. Today they're in profit, tomorrow they're in loss. And in a range, the market tends to act irrational. What does it mean? The market tends to act mad. Laws of price actions are not respected in the range. The market tends to look crazy, and like I said, Traders lost money. A lot of persons abandoned their strategies. A lot of persons were looking for that only great strategy. So if we are trading within this market condition, within this period, the market was in this kind of condition, and you lost money, it might not really be your fault. You just found yourself in a crazy market condition that requires a strong level of experience. Okay, so I'm not here to dwell on people's losses today. Let's just keep going with the analysis. Let's see how we can put money in our pocket. So I saw this double bottom. We broke out of the range. This was a simple breakout retest. You see it on the daily time frame. Just let me zoom back a little bit. Why am I doing this? So that we get to understand my trading methodology and get to see how I trade. So this was the breakout of the range. It pulled back into the range. So I'm more of a breakout retest, a break of a counter trend kind of trader. So once price broke my counter trend line, immediately I jumped in for a buy, right? At the 100% retracement level, which is here, I close out 50% of my position, push my stop loss past break even, anticipation my second trade will get to my overall target, which is here, which is this blue bar here. All right, now I get this question in Traders ask me, what do you mean when you say you close out 50% of your position at the 100% retracement level? And what do you mean when you say you push your stop loss past break even? What's even the ideology behind this trade management? I'm going to explain all of it to you guys. So this point, the market started coming down. This is the 100% retracement level. This point, the market had to trace back. It's 100% retracement level. Now, I opened two positions. I used two positions, right? So if you trade the $100 account, use 0.01, 0.01. If you trade the $200 account, use 0.01, 0.01. If you trade the $300 account, use 0.01, 0.02. If you trade the $400 account, use 0.02, 0.02. If you trade the $500 account, use 0.02, 0.03. This lot size I held it for this account. All right. So once price breaks out from my counter trend line and gets to my 100% retracement level, which is here, I'm going to close out the first trade entirely as profit. Okay, I'm going to push so I bought somewhere around there. I'm going to push my stop loss above where I bought from. This is what I mean break even. I'll push my stop loss above where I bought from. Anticipation of my second trade will get to my overall target, which is here. Now, what's the ideology behind this trade? This trade management, because in few times, and notice when price gets to the 100% retracement level, it tends to act irrational, or we may have a funny movement and market will just retrace and come back and hit your stop loss. An average trader will become very angry and wants to revenge his trade back. Why? Because they were in profit all the way from here, only for the market to come here, start moving sideways, and come and eat your stop loss. And once this happens to you, best believe your next trade may likely be a losing trade. Most person would have jumped in for another buy. I think, okay, buy just wants to come and fulfill this level before blowing up. They may actually buy only the market will actually be in profit here. And what happens? Price comes and hurts their stop loss. So this becomes too losing trade for them. Now, the purpose of doing like I said earlier on, I didn't know market will come here and reverse. But what I did know is that at the 100% retracement level, there is a probability we might have a reversal. We can come here and form a base and come back here. I don't want to know how it's going to happen, when it's going to happen. But what I know is I always take out something from the market, no matter how little it is. The market I know it wants to come here. But what I know for a fact, the market is not my father's house. It can act irrational. Something can happen that can trigger the market to want to reverse. So I'm going to take out something from here, put in my pocket. Now, when I mean break even, does not mean that price came and smashed my stop loss for a losing trade on my second position. No. So I bought somewhere around here. I'm going to push my stop loss above where I bought from. So my second trade has secured a little bit from the market. All right, the anticipation we get here. So when the market wants to come here, see how the market came here. When I saw the market moving like this, I wasn't really confident. So I pushed my stop loss around here, and when price came and smashed my stop loss. Or this way, I've taken something from the market. Anyway, so what happened was this market manipulation. Was this breakout a market manipulation? No, this wasn't market manipulation. We have every intention of breaking from here and even coming here. If possible, create a new higher high. This was as a result of Donald Trump tariff war. This pullback into the range was as a result of Donald Trump tariff war. He went into a major tariff war with almost all the major countries in the world: China, the European states, Canada, and the likes. And this country kind of retaliated, and that backlash on the US economy. It created an uncertainty with the US economy. And once there's uncertainty with an economy, investors tend to pull out funds from that economy. So hence this collapse back into the range. Like I said earlier on, the dollar index mirrors the health of the US economy. So when we broke back into the range, I wasn't really interested in clicking that sell button. So we broke out into the range, came back and violated this support area. Once I saw this breakout, a retest of here. Now I'm interested. So this was a simple trade, a breakout, retest of this level, pointing down, double top from the weekly time frame, telling me this pullback wants to reverse to continue with the major momentum from the monthly time frame. It was a very simple trade. We had this was a double top we spotted on the weekly time frame. This was the first top, second top. Double top are bearish reversal sharp pattern. They can reverse a pullback or an immediate trend to continue with a major trend. So the major momentum from the monthly time frame is bearish. This was the breakout. This was the pullback. This double top is reversing this pullback to continue with the major flow from the market, which is bearish. So this was a simple trade for me. I'm going to take this level off. Pardon me. So this was the neckline of the double bottom. Pardon me, I'm going to put a snippet somewhere when we are taking this trade, so you get to see my thought process before the trade actually played out, okay? And also you get to see my transparency. So that's very key. I'm going to put a snippet somewhere. So this was a very simple trade for me. This was a double top neckline, a break of the neckline. Let me zoom in properly. This was a break. This area marked with gray bar is the neckline, the double top. So at the break of my counter trend line, we don't sell at support or resistance. So once we came back here, we traded around this area. I drew my counter trend line, the 4-hour break of my counter trend line, stop loss above here. We sold. Once price came to the 100% retracement level, I closed out 50% of my position. Okay. Like I said earlier, I don't care how little it is. I closed out 50% of my position. Push my stop loss past break even to here. And what happened? We came back here. Now, when we came back here, this area was an area of concern for us, right? So let me zoom in properly. Let's go to the daily time. This area was an area of concern for us. Why? Because this was the level at which let me put it okay. This was the level at which price broke out from before, retraced into here, and while we coming down, we retested the push up a little bit again. We came back here. We kind of played around this area for a while. See how we played around, broke, tested it. So I knew for a fact that we might have an issue with this level. So once price came here, I started locking in my position. Our overall target was 0, but once price came here, I started locking in my position because I suspected we might have an issue here. My stop loss was somewhere, so we break out and somewhere around here. When we came out, we pushed here and we rejected here. I adjusted my stop to here, thinking we'll come here. And what happened? In truth, this area stood ground, and we've had this pullback to the upside. We kind of violated the this bearish move to the downside. Kind of violated it, okay? You see it on the 4-hour. Let me answer this properly. So we kind of violated this bearish move to the downside. Let me take off this so we don't have too many lines on my chart. Alright, so this was the trend. Okay. So this was the level. We kind of violated the daily, the lower time frame trend line, the bearish trend line violated. We break above, we came shy from retesting it, and we are currently racing to the upside. So what's next for the dollar index? Let me clean all of this. I don't need all of this again. Let's go back to the monthly time frame. Let's analyze this market. Let's see if there's a stable opportunity for us. So what I can see is we've had this steep breakout, a steep move like this, and we are currently consolidating. So these are several months of indecision going around this area. Once the market moves sideways, it just tells you indecision. So this move is identical to this move. Remember when I say whenever the market moves straight, it tends to go into a range. We had this straight move like this, we went into a range. So we had a straight downpour. We are currently consolidating. So you see, I know what I'm talking about. I've been doing this over 10 years, so best believe I know what I'm talking about. So this is several months of indecision going around here. I'm currently out of this market right here because the market is ranging. We still have by Joe this bullish trend lines what keeping this market come from actually coming down. Okay, and the only way I'll be interested in clicking a sell button for this market is if I see price break. If we break above here, let's go to 4 out. If we break above here, if we pull back and break above here, I'll start looking for sell towards this area. So it will be a very simple trade, a breakout of this area. So if you break like this and we pull back into this area for a retest, a break of my counter trend line, I will sell all the way into this area. Once you come here, I'll start to lock in 70 to 80% of my position at this level. Why? Because this is the 100% retracement level. This was the area price started reversing to the upside. So this is the 100% retracement level. I'll start locking in position, okay? Mind you, once you come here, I'll lock in position, but this will be my overall target where I'll lock like 60, 70% of my position, okay? So that will be one of my criteria for selling, okay? That will be one of my criteria for selling. Right now, I don't have any buyers, and especially if I account for the weeks of this area. So let me teach you guys a little bit. The market is currently consolidating. How do I know we are moving sideways? This is a sideways movement. Like I said, once the market starts to move sideways, the market tends to act irrational, and there are so many levels. When the market begins to move sideways, there are so many levels, right? So this is the level. You can see price came here, rejected, push up. While coming down, it kind of kissed this level, came down, we spiked up again, closed. We had issue breaching this level. We broke our above, retested, we went up. Now we are currently on around this area. You see it on daily. So if I draw my Fibonacci from swing high, that's my Fibonacci. Okay, here you go. From swing high to swing low. Sorry guys, I'm trying to be the case as to why we should consider taking a sell or what. So this is the 55th Fibonacci. The price, this is a retracement into the 55th Fibonacci. For those of us we are not familiar with Fibonacci. Fibonacci are retracement level. The 50% and the 61.8 level are the most potent reversal level. So I'm looking for a reason as to why we should sell. So we have normal resistance here. We have Fibonacci resistance here. Price has run into the 55th Fibonacci level. If I see a daily or a weekly or a monthly candle bounce from this level, best believe we might actually start rolling to the downside. If I see a monthly or weekly candle bounce from here, we are coming down here. Why? Because we have normal resistance. We have 50 fib resistance, and we also have a demand level. This is a supply level, demand level somewhere around there. All right, so if we bounce from here, we are coming down. Okay, it's as simple as that. But again, me looking at this from a big picture perspective, this is just telling me this is a low, a high, a higher low. If I draw my Fibonacci from this swing low to this swing high, you can actually see that we've run into the 61.8 Fibonacci level. So there is confluence here. The market is telling us, the market is giving us reason as to why it wants to buy. It's also giving us reason as to why it wants to sell. Like I said, when the market goes into a range, the market tends to act irrational. This is the time as traders, we should sit on our hands. So I'm not going to interfere with the dollar index now. I'm going to sit out and allow the market do its thing. You can put your money here, it can go in your favor, it can go against you. So the market is giving us conflicting views. This is a low, a higher low. So It's basically telling me that it's trying to put out the characteristic of an uptrend. If I from the daily time frame perspectives, let me clean those guys. So it's looking like a low, a high, a higher low. A continuation to the upside might actually occur. But the deciding factor will be this black bar. If we break out from this black bar, we are coming here. It's as simple as that. But I'll not be interested in clicking any further button buy or sell. But if we bounce from here, you're an intraday trader, like I said earlier on, bounce from here, we are coming here, right? But if we break out from here, we are going up. So that will be the deciding factor for the dollar index. Although I'm praying the dollar index just keep going up because it means the euro will crash. Like I said earlier on, if the dollar index is bullish, every other major currency pair is likely going to be bearish. So I want the euro to crash so we can have the opportunity. So I'll be sitting my hands. What my rules of engagement? The deciding factor will be here. But in truth, I'll be sitting on this. I'll be sitting on my hands on this. I have no bias on the euros, on the dollar index. We can blow to the upside. We can reverse to the downside. It just tells you there's confusion going on around this level. So, if you see a bearish engulfing candle bounce here, best believe we are coming here. If we break out from here, we are going up. All right, let's look at other currency pairs. Let's look at the euros. Let's see if you can find a cheap opportunity on the euros. The USD, here we go. All right, so I'm going to clean all of these. Should I clean my charts? Let me leave it on. The USD, for the better part of 2025, we anticipated a rollover of this immediate bullish trend to continue with the major trend, which is bearish. I'll take that again. The euros, the better part of 2025, we anticipated this bullish trend, is an immediate bullish trend to reverse and start coming down to continue with the major trend, which is bearish. Before we start talking about all of this, let's identify the major trend so we have a clear perspective of what we are working with, okay? The major trend is bearish. It is not bearish because we are pointing down. It is bearish because it checks all the characteristic, all the boxes of a downtrend. So we have a high, a low, a lower high, a lower low, a lower high, a new lower low. Although we've had this pullback that has run into this area of concern from the major time frame, we also violated the bigger bearish trend line, which is this one. We violated the bearish trend line, which was this one. This was the bigger bearish trend line. We violated it. But a break of a trend line is not a change in market structure. I feel like a lot of traders miss out on this information a lot. A lot of traders don't have this kind of knowledge. They feel once price breaks out from a trend line, it's a change in market structure. No. Trend lines are technical tools. They mark out potential areas of price reversal. If price bounces from a trend line, it just tells the price has bounced to reverse with a trend. If price breaks out of a trend line, it just tells you that price has broken out of a trend line. I just broke down a trend line. It has failed to reverse to continue with the trend. It's as simple as that. Trend lines break and not market structure change. Would you have said this was okay? Would you have said this was a change in market structure when we broke above the trend line, came here, supported here, ran to this resistance and crashed back? Would you? No. No, you wouldn't have, right? Like I said earlier on, trend lines are technical tools, not market structure. So let's take us this trend line. So we've had this pullback that has violated the big trend, and it has run into a major area of resistance from the monthly time frame. So how do we know when a pullback wants to reverse to continue with a major trend? It always runs into a key area of the higher time frame. Okay, and best believe once you see reversal sharp pattern like IE, double top, head and shoulder, inverse head and shoulder, double bottom, that is just market just basically telling you that pullback or that immediate trend wants to reverse to continue with the major trend, which is bearish. On this case, bearish. So this pullback has run into a major area of resistance with And not only that, we also have trend line resistance. We bounce from the trend line resistance. We have having issues breaching this area. We also have Fibonacci play from swing high to swing low. I don't mind swing high to swing low. You can actually still have Fibonacci play, right? So this was one of the reasons why we anticipated a rollover of the E. We had a pullback that has run into a major area of resistance. And we also have trend line resistance. We have Fibonacci resistance. We have price bouncing from all three confluence. Just tells you we should start looking for selling momentum, that this pullback should reverse to continue with the major trend, which is bearish. But for several months, we've had indecision around this area. Price has been finding it very difficult to break free from this area. These are several months of indecision going around this area. Anytime we try to break below this area, we always pull back in. We tried again, pull back in. So this, and also price has also been finding it very difficult to breach this area. For any time we break out, we pull back in, we reject at this area, we tried again, we close, we reject back at this area, we tried again, we reject at this area. So I'll just come here and put a black bar here, okay? So from what I can see from the weekly time frame is we form a triple top. Triple top are bearish reversal sharp pattern that can reverse a trend from being bullish to being bearish. So triple top telling us price wants to reverse, this immediate trend wants to reverse to continue with the immediate trend, which is bearish. So my rules of engagement will be this. I would love to see price come out and take out this blue. I would love to see a weekly or a monthly candle break of this area. Once we have a monthly candle break of this area, best believe we've go all the way to the downside. It just means we respected this area, and it's now time to start looking for selling position, especially if nothing too serious happens with the US economy. Okay, the dollars will bring the euros to its knees. All right, if we break out from this blue bar and we take out, so you see this on the daily time frame. So this, if we break out from here and we take out this counter trend line, we are coming down. It's as simple as that. So this was the triple top, first top, second top, third top, telling us a reversal to the downside. So wait for the proper break of this area. Once we take out this level and this level, I'll start selling. I'm not interested in clicking that buy or sell button within the year and here. Never. I'm not interested. I'm a swing trader. I love to give my market space. I love to hold my trade for very lengthy period of time. Whatever is happening here holds no importance to me because this is madness. When the market started moving like this, it just tells you when there's indecision going around a level, the market tends to act irrational. Okay, so rules of engagement: wait for the breakout of this blue bar, counter trend line. We are coming all the way to the downside. My first area of profit target will be this area. I'll be closing some of my position. Once we break here, we are coming here. Once we take out here, we are coming here. The market moves from level to level, okay? See how we broke here, came here, we tested this level, we came to this level. If we are coming now, we'll test here, come here. So once we take out here, we are coming here. Once we take out here, we are coming here. It's as simple as that. So first level target will be here. Second level target will be here. All right, let's look at reasons as to why this market will not play out, or if the market wants to act irrational, we are not taken by surprise. All right, so if for any reason we fail to breach this area and we break above this gray bar that I marked out here, best believe we'll blow to the upside. If we take out this area or this area in confluence with this trend line, we are coming here. It's as simple as that. It just tells you we fail to respect this area and we'll just come here. Just also tells that the US economy is not strong enough to bring the euros to its knees. If we take out this area marked with this minor resistance, because this is the area price tried to breach from and failed. We came here, we rejected, we came back here, pushed up again. We had a candle close below this area. We tried again, we closed. It is no brainer. Just put the resistance here, a resistance bar here, and say to yourself, if you see a breakout of here, it just means we are coming here. So right now, I'm not interested in doing anything right now until I see a proper break of this level. Once we break here, trust me, I'll be looking for selling position to the downside. But if we take out here, I'm looking for buying position to the downside. As traders, we are reactors. We react to the market conditions. We react to the opportunity the market gives to us. I'm not going to come here and start to force trade or go to lower time and start looking for buy or sell setup. This is indecision going around this area. The market has to commit. It has to tell me what it wants to do next. So if we break here, all fine and good, we are coming here. Our overall target will be here. I want the market to break and come down. But if we take out this gray bar, okay, we are going up. Either way, we will make money. All right, so let's look at GBP USD. After GBP USD, we'll look at BTC USD card. That we'll call it a day. All right, so GBP USD, the pound is kind of similar to the dollar. Right, it's kind of similar to the Euro USD chart. We've had this pullback that has run into major area of resistance. We're having 7 months of indecision going around here. We also have a bearish trend line as to why this immediate bullish trend should reverse to continue with the major trend, which is bearish. But for 7 months, the market is finding it very difficult to breach this area. Although on the weekly, I can see we've now rejected at the trend line. We are currently pointing down. So the deciding factor will be here. If you have a bearish candle break off here, we'll start rolling all the way to the downside. This area will be my first level profit target. Okay, I will close a little of my position somewhere around this level. Why? Price has reacted to this area before in the past. You see, we have reaction around this level. So on the weekly, I can see a failed head and shoulder pattern. Left shoulder, head, right shoulder. So this just goes out to all those self-acclaimed forex gurus, mentors on Instagram, on YouTube, on TikTok that claim sharp pattern that happens on the higher time frame must play out. There you go. We have a failed head and shoulder on the weekly time frame, a higher time frame. Sharp patterns, regardless of the time frame they occur, they can be invalidated. Okay, the market is not a game or simulator. The market is moved by a socio-political factor. All right. So this head and shoulder pattern had every intention of reversing this immediate trend to continue with the major trend. We broke out of the neckline, which is good. Ideally, we anticipated for price to pull back into the neckline for a retest. A bounce off here would have started rolling back to the downside. But what happened? We broke above the neckline. Once we broke above the neckline, this automatically head and shoulder pattern became invalidated. But all things be equal, this trend line here has rejected price downward. So what will be the route of engagement? I would love to see a proper candle break of this level. Once you take out this level like this, so this will be my route of engagement, will be a breakout, a pullback into this level, a bounce. Don't say as support or resistance. Wait for price to bounce from this level. A break of our counter trend line. You know how I talked about the dollar index when we broke above that. Is it the dollar index? Yeah, dollar index will break above that range, pull back for a retest. I drew my counter trend line. Same thing here. Wait for a breakout, a retest here. Draw your counter trend line. Go to the 4-hour time frame to refine your level. The 4 hours, the 1 hour to see the pullbacks. Then draw your counter trend line connecting the pullback. A break of your counter, you jump in for a sell. I see no reason as to why we shouldn't go all the way to the downside. So we'll come here. It's as simple as that. If we break here, a retest here, we are coming here. At the 100% retrace level here, close out 50% of your position. That will lock in. Once price comes here, lock in position. It will come all the way to the downside. Okay. That is if we break, if you have a daily candle break below this area. I see no reason why I shouldn't hold all the way to the downside. Okay. Let me clean all of these. But if for any reason we come here and we form a base here and we start pushing to the upside, I'll not be interested in clicking a buy. But once we take out this area marked with black bar, okay, let's go back to the monthly so we can see properly. This area marked with black bar, once price comes here and take out this area, we are coming here because this was the area we tried, we failed. We tried again, we failed. Once we take out this trend line and we come here, we break above here, we are coming here. And also I spotted a reason as to why the pan wants to head to the upside. An area of concern for me. If I take out this trend line and I draw my other trend line from here, this is looking like a breakout, a retest contribution to the upside. Okay, like I said, these are several indecision going around there. The price doesn't know if it wants to go up, if it wants to come down. This is looking like a proper. So let's zoom out so you can see it properly. So this was the first touch, second touch, third touch. Last year, 2024 November, I sold somewhere around there. We came here. Once we came here, locked position. Now price has come back and break above this trend line. It has come back to retest. We are currently pointing up. So the deciding factor will be if we break above this black bar, we are coming here. So there is conflict here. All right, we are trading between two trend lines. I jump. So first trend line is telling us price. First line is telling us is telling us back to the downside. This one is telling us breakout. Let's zoom so you can see it properly. So this is the first trend line. This is the second trend line. We are trading between these trend lines. So when I say price is trading between two trend lines, it just tells you the trading probability is 50-50. This is not the time you want to be looking for buy and sell within this area. So one of which I explained earlier on has to happen. For me to consider a sell, we have to break below this blue bar. If I will consider a sell, for me to consider a buy, we have to take out this gray area. If we break here, we are coming down, all fine and good. If we break here, we are coming here. But so far as we are trading between these two trend lines, please, this is the point traders you want to sit on your hand. The trading probability is 50-50. And as traders, we don't trade 50-50 trading opportunity. We trade trading probability that is 70-30 in our favor, 80-20 in our favor, 90-10 in our favor, not 50-50. If you put your money here, you're gambling. 50-50 is your gambling. So you have to sit. This is the point I advise you that please sit on your hands, okay? The deciding factor will be either a break of this blue bar or a break of this place. Give the market a couple of days or weeks or months to decide, okay? So that's it for the euros. AUD/USD is kind of crazy. I have no bias on AUD/USD. BTC, let's look at BTC. All right, here we go. Let's look at BTC. Let's see how we can identify trade opportunity. Let's see how we can identify probability or trade opportunity we use to put money in our pocket. The BTC chart in front of us. I'll start by drawing my key levels. Okay. Don't worry, I'm going to explain. Okay. All right. So key levels has been drawn. Before we start the analysis, I want us to critically examine previous price action behavior. We'll be using that in confluence with our technical analysis, right? So see how notice how BTC came into $67,000 per coin. We had this double top, we pull back to the downside. We had double top bearish reversal sharp pattern, right? So we had this double top reversing back to the downside before actually firing back to the up. We came into $100 per coin. Best believe on the lower time frame there was a reversal sharp pattern here. We pull back before actually firing back to the up. So we came to $124,000 per coin. This is the all-time high for BTC. So we had this sideways movement. We pull back to the downside. So this kind of behavior are very normal and common with features like BTC or the stock market, S&P 500, US 30. So what tends to happen is for every milestone achieved, investors tend to close position as profits. Okay, so when BTC came into $67,000 per coin, positions were closed as profit, hence this double top. They pull back to the downside before we actually fire back to the upside again. When we came into $100 per coin, it was at the time it was the milestone achievement for BTC. Investors close position, so we pull back to the downside before actually firing back to the upside. So this was the ideology behind our sale here. Once we came into $124,000 per coin, judging from previous price action behavior, we should expect a sell to the downside, right? So let me mark this level. Let me mark the close of the previous high. Cool. All right. So once we came here, $124,000 per coin, a milestone achievement for BTC. It has never been here before. When I saw this sideways movement, judging from previous price action behavior, I expected us to pull back to the downside. So it was no brainer. The weekly time frame confirmed our buy that we should expect a reversal to the downside. So double top telling us reversal. It wants to reverse this bullish trend to pull back to the downside. All right, so once we saw this double top, our mindset already has been wired what reversal to the downside, and also with previous price action behavior that the monthly time frame has told us, right? So we waited. How did we trade this? We waited for price to break out from the neckline. We don't sell at the breakout of the neckline. One price to break out from the neckline. Once price broke out of the neckline, now we are looking for selling position. Mind you, we don't sell at the breakouts, okay? And we don't trade on the monthly and weekly time frame. These candles are too massive, right? So our stop loss here is going to be very wide, right? So once we saw the breakout, we start to refine our entry. We'll go to the lower time frame, like the daily. Not only daily, we can actually see the levels properly. So this was the breakout of the double top. So let me zoom out properly. So this was the double top. This was the breakout, a retest. So one price to break out from the neckline of the double top, pull back into the neckline or shoulder line, whichever way you call it. We want to see a bounce from this area. We don't sell at support and resistance. If you've been trading with me for a while now, you know we don't sell at support and resistance, okay? So past we have to push out from this area. It was a simple trade. At the 4-hour trade is when we jump in for a sell. So it was a simple counter trend line break. I jumped in for a sell at the break of my counter trend line. Immediately we break out from here. I sold my stop loss area where here we came directly to my overall target. Yeah, this was one of the best trades I took last year in November, sometime last year November / December period. One of the best trades I took. It just came directly to my profit. So what's next for BTC? Let's see what's next for BTC. We've come into my overall target, which is this area here. I'll tell you why my overall target were here, right? If I draw my trend line, I connect my trend line, you can actually see this area, this support area, kind of aligned with our bullish trend line. So once price came here, mind you, because I have prior knowledge of how this BTC behave, right? I wasn't expecting a full scale reversal, all right? Because I know that the cause of the reversal was as a result of investors closing position as profit. They have made profit and they sold some of the coin, and that's why we crashed. So I knew for a fact the nearest support will be an area of concern where we'll come and we'll start expecting the pushback to the upside. So, and it kind of aligned with my trend line, right? So we came into here, and this was the third touch of the trend line. For those of us who are familiar or who are not familiar with trend lines are technical tools, right? And the major potential areas of price reversal. And the third touch is where the third bounce of a trend line does the reversal. So once we came here, it was no brainer. I closed out all of my position from the sales I did here. Once we came here, I sold from here, right? Somewhere around here. Once we came here, all position has been closed. In expectation, we want to reverse to continue with the bullish trend. All right, so if I draw my Fibonacci, I bring up my Fibonacci tool. You can actually see we've kind of run into the 50% Fibonacci level, which is also in confluence with our trend line. So we have confluence here. We have 50th Fibonacci level. We have trend line support. We have normal support, giving us reasons as to why we should expect a reversal to the upside. Fibonacci are a retracement level. The 50% and the 61.8 Fibonacci level are the most potent level price will come into the 50% or the 61.8 Fibonacci level, you should expect a reversal of a trend. No, you should expect a pullback to reverse to continue with a trend. So once we come here, I'm expecting us to reverse to continue with the trend. Although these candles are not looking healthy, I expect a bullish engulfing candle here, pushing up, telling us okay, we are ready to go up, right? So on the weekly, I can still have several weeks of indecision going around there. So what I will do is I'll come here and put a resistance bar here. Cool. Why am I putting a resistance bar here? Because we've tried to push out, from this level a couple of times. We failed. We failed. We tried first one, we closed, we came down, we tried again, we failed, we tried again, we failed, we currently tried again, we failed. So it's no brainer. Just put a resistance bar and say to yourself, if we have a bullish engulfing candle break out of this area, now I will come and start looking for buying position. It means we've respected this level and we can start pushing back to the upside. That's if we break out from this area right here, this area right here, until I see a bullish candle breakout from here. Start to look for buying position. Although I spotted a reason as to why we may experience a further dip to the downside, right? So if I zoom out properly, go back to the monthly time frame, you can actually see this is looking like a left shoulder, this is looking like a right shoulder, a potential. So this is looking like a left shoulder, a head, a potential right shoulder might form somewhere around there. Either should happen, will form a right shoulder here. We might actually, start reversing to the down. We might actually experience a further dip to the downside, especially if we break out from the neckline, a pullback. So if you from something like this, a breakout of the neckline like this, and we pull back, pardon me, my mouse is out in the back. Okay, so sorry, my mouse is kind of acting up right now. What's wrong with my mouse? Okay, let me just take this one off. Okay, so a breakout, a pullback, a retest of this zone. Once you come here and we bounce from here, a break of our counter trend line. You know how we sold from here and we broke out, we came back here for a retest, a break of my counter trend line, jump in for it. So same thing is going to happen here. If we break out from here, we'll come like this. We have the probability of coming like this. If I say a breakout, a retest of here, that's if we form a right shoulder around here and we break out, we retest, then we might actually come here, if possible. May even come a lot more further to the downside. Why? Because head and shoulder pattern are bearish reversal sharp pattern. They can reverse a trend, a major trend, from being bullish to being bearish. So like I said, I'm favoring this market to the upside to the tune of 60%. If I see a bullish candle break out of here, I feel we'll just continue going back up. But if we come here and form a base around here and we form a potential right shoulder, this will be the neckline of the head and shoulder pattern. And once we break out from the neckline, we'll pull back for here, might experience a further dip to the downside, and I'll start selling all the way here. Maybe potentially we might actually experience maybe a further decline to the downside. I don't know. Price will tell us. But for now, I have no bias on. I have no entry on BTC. That's okay. As traders, our number one job is to react to tradable opportunity, not force tradable opportunity on the market. I'm not going to come here or go to the lower time frame and start looking for buy or sell position somewhere around here. On the lower time frame, this is a mess. Okay, this is that level of mark. This is how it's going up, it's coming down, it's going up. No, I'm not going to come here and put my money here. Tradable opportunity here is 50-50. You can put your money here, you can make profit, you can make loss. As traders, we don't trade 50-50 tradable opportunity. So I'm going to sit on my hands and let the market decide. If we break out from here, or fine and good, we are coming here. But if we form a potential right shoulder around here, we take out this neckline, we are coming here. So it's as simple as that. All right, so like I said earlier, on our traders, we react to what the market gives us. But for now, I have no bias on BTC. Let's give it a day or two, or some weeks and let the market decide what it wants to do. All right, that's it for BTC. Let's look at the USD card. All right, so in front of us we have the USD card. Let's see how we can identify tradable opportunity. Pardon me, like my chart is this nasty. This is what tends to happen when the market goes into a range. There are so many intermediate level, but notwithstanding, we'll break this pair down and we'll see if we can identify a tradable opportunity. So before we start talking, you know how I trade. I like to look at the overall trend. So we had this massive move to the upside. We consolidated. I told you guys before, whenever the market move this linear like this street like this, we tend to move sideways. We tend to go into a range. So for a lengthy period of time, we've been trading between this high and this low. Between this high, this area marked with blue band, this low. It looks like sometime around 2014 we breached this, we broke out of the range. We broke out of the range, but I wasn't really comfortable with the breakout because this high was not significantly higher than this last two previous high. This high was not significantly higher than this, and especially if we account for the weeks of the last two previous high, you can actually see this is a triple top. So triple top are bearish reversal sharp pattern can reverse a trend from being bullish to being bearish. So triple top just tells you start looking for selling pressure to the downside. So once we came back below this area, once we broke back below this area, we pull back and we came underneath for a retest. I just knew at this point we should expect a sell to the downside. So let me teach you a little bit trick. Once price breach an area and couldn't sustain that level and we break below that area and we pull back underneath that level for a retest, best believe we should expect a rollover to the downside. So it was a no-brainer. We couldn't sustain, we pull back, we tested here. I should expect a sell to the downside. Okay, so this was the breakout, a retest. On the daily time frame, we can see we had a bounce on the weekly time frame. A bearish bounce here just tells you start selling. On the daily time frame, interpret that level clearly. So this was double top on this key, on this resistance area, reversing this pullback to continue with the momentum from the monthly time frame, which is bearish. So this was the breakout, this was the pullback, this is the double top reversing this pullback to continue with the major momentum from the monthly time frame. You guys know how I trade my sharp pattern. The same is very simple. Identify the neckline of the double top. So this was the neckline. Very simple trade. We don't trade on the monthly. I said it before. Don't trade on the higher time from the monthly, weekly, or daily. Those candles are too massive, right? We need to refine our level by going to the weekly, lower time frame, i.e., the 4 hours, the 1 hour, so we can see the waves. We can connect the waves properly. So, it was very simple trade. The break of my counter trend line, I jumped in for a sell, right? All right, so what happened? We had all this came smoothly to the downside like this. It was a very beautiful trade. Though I identified an area of concern, which I expected for us to have an issue with, which was this area. Yeah, this area was an area of concern for me. I expected price to let me mark put this place with a bar. Cool. I expect us to come into here and start pushing back to the upside. But all things being good, we came reacted a little bit, pull back, break below. I thought it would start coming back here. I adjusted my stop loss to somewhere around here, thinking we'll come to my overall target, or at least my intermediate target. But we came massively shy from. We came a little bit shy, not massively. We came a little bit shy from our target, and we had this massive pullback to the upside. So what's next for the dollar card? Let me clean all of this. Let's realize this market. Let's see what's next for the dollar card. Okay, back to the monthly time frame. Like I said, the market is in a range, and what tends to happen in a range is we tend to have snapbacks, right? In a range, the market acts irrational, the market acts mad, right? So this is what you get when you trade a ranging market condition that tends to be snapbacks. Okay, so I can see a breakout, a retest. We try breaking this trend line. We feel that this trend line was what is this trend line was This trend line is the catalyst as to why we didn't move out to the downside. So this trend line is holding this market from actually falling down. So the deciding factor will be this area marked with black bar. No, not this area. Deciding factor will be this area. Let's go to the daily time frame. Cool. So if I look left here, bringing my strategy. Okay, bringing my. Okay. Pardon me. I will explain. Pardon me. I think. Okay. Cool. All right. Cool. So the deciding factor will be this area marked with gray bar. Why so? Like I said, the momentum from the monthly time frame is bearish. All right. So we've run into the 50% Fibonacci level. All right, we've run into the 50% Fibonacci. Let me get this right. We've run into the 50% Fibonacci level. So if I see a bearish engulfing candle bounce from here, it just means we'll start rolling down to the downside to continue with our trend, which is bearish. Why did I mark out this level? The way we were coming down here at the time was very suspicious to me. The market does not really move this linear. Like whenever the market move this linear like this, market hardly move like this. So we didn't have a proper pullback. There was no proper pullback. So I'm guessing this is a pullback, at least to retest here to continue with the momentum, which is bearish. So the deciding factor will be this area as a marked with gray bar. If I see a bounce from here, a bearish engulfing candle bounce, a weekly or a daily bounce from here, we'll continue with the trend, which is bearish. But if we push out, especially if we violate this 61.8 Fibonacci level and we start pushing to the upside, it just the whole sales setup is fucked up. I might want to experience a reversal to the upside. So the deciding factor would be this gray bar or this 61.8 Fibonacci level. Actually, there should be a supply level here. There should be a demand level right here. So we'll look at these two levels and see what happens. So this one or this one, we should expect a bounce to continue with the major time frame, with the major momentum from the monthly time frame, which is bearish. Let's all finger crossed. Let's see what happens. Until that happens, I have no bias for USD card. So let's see if we have a bounce here, we'll start coming to the downside, start experience a further decline to the downside. Once we take out this level, or for me, I'm a conservative trader. All right, once we bounce from here, we are coming. I won't click that sell button yet. Why? Because you can come here, form a base here, and blow back to the upside. It is possible. We can come here, form a base, and blow to the upside. I'll wait for price to take out this level. Once we take out this level, it just confirm to us, okay, all fine and good. We will definitely come here. Okay, we'll definitely come here. So if we bounce from here, I won't be interested in clicking that sell button until I see price come and take out this level. I will definitely come here. So USD card, I have no bias now. The market has to commit, has to tell me where it wants to head to. Until that happens, I'm not interested in clicking any button within this level here. I'm not interested in clicking any button within this level. I want to see a breakout of this level so that we can actually come here. Until that happens, for now I have no bias. All right, so that's it for USD card. I will handle the video with USD card. I want to really appreciate you guys for actually staying from the beginning down to the end. If you have any question, please drop it on the comment section. Like I said earlier, when I go through the comment section, you never can tell. Your comment can actually be an inspiration into my next video. For now, peace and love. I will catch you guys on my subsequent videos.